morning, Steve Reed with the morning grain comments. Beans are up 6 cents, corn's up 3 cents, and wheat's up 11 cents. In the bean market, we're trying to maybe establish some kind of trading range in the July between 12 and 12.50. $12 support comes with uncertainty about the U.S. Summer weather, whereas 12.50, if you look at the numbers, the South American crops are maybe not as low as some people fear, even though it continues to be flooding type rains in southern Brazil. And the corn crop, according to CONAB, is lower than what the USDA is saying. Argentina, similar in that the corn crop is lower than what the USDA is saying, but does that offer any increase in U.S. corn export demand or any soybean demand? And again, the Chinese appear to be slow buyers of U.S. beans. They have bought no new crop U.S. soybeans to date. Last year, they bought about 34 million bushels to date. So crop ratings still above average and last year, while corn planting pace is kind of behind average, while soybean planting pace is right on average. It looks in here in the U.S. Midwest that we'll continue to see shower activity, mostly in the extreme southern part of the country and also in the eastern Corn Belt. Western Corn Belt may not see as much rains. Our weather guide today is kind of looking at some of those 6 analog years in which the weather turns drier in the summer. And one sticks out, 1970, in which we had some spring rains, and those rains continued into June. And what happened was that there was enough rain activity and not as much heat that they grew a pretty good crop that year. And even though in July and August it turned drier, it wasn't hot. So our weather guy is beginning to raise a little bit of a red flag that maybe we won't see the type of weather this summer that would rally prices significantly. In the corn market at basically 470, again, we're up against resistance. $5 is still an objective on the marketplace, but this may have to be on increased demand more than concern about the crops. In the wheat, one person estimated that December wheat at 737 in Chicago, 741 in KC, and where we're right at 760 in Minneapolis might be a good place for farmers to sell cash. If we trade above that, it would suggest that maybe globally, stocks-to-usage ratio of major exporters might be record low. So the focus continues to be on Russia. Next week, they might have some shower activity, but all the long-range models suggest that a ridge of high pressure redevelops over parts of southern Russia and eastern Ukraine. And so that offers some support in the wheat market at these price levels, which some people feel could be a good place to increase cash sales, but B, a top in the marketplace. Outside markets waiting for CPI data and inflation data and see how that changes. The Fed comments, they continue to talk about that 2% inflation goal is where they want to get to before they start dropping rates. But we are trading right now that they could be a 50 basis point increase in September.